Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Friday, the Australian dollar's bearishness deepened as the bears crushed the 66.10 support, triggering stop losses and plunging it back to the lows of August near 63.5. While the US dollar index, which measures the greenback strength against a basket of 6 major currencies, recaptured the 106 level after the much-awaited US job data provided the perfect setup ahead of the Federal Reserve's December meeting, confirming expectations for a 25 base point rate cut. Fed Chair Powell emphasized gradual rate cuts as the economy shows signs of improvement. The US Labor Department reported 227,000 jobs added in November, slightly beating the forecast, though a rise in employment, however, to 4.2, hinting at a cooling labour market. Turning to this week, attention looks towards the US CPI, the PPI, and with China's inflation data as well. Along with that, also we have the central bank's rate decisions from the ECB, the RBA, and also from the Bank of Canada and the Swiss National Bank. So no doubt this will cause much volatility. Along with that, we've got the UK GDP and the Australian employment figures. On Tuesday, it's widely expected that the RBA will keep rates at 4.35%, but there is still much pressure on the bank to cut. Nevertheless, they're still unlikely to cut rates, so still keeping at 4.35%. So turning to the Australian dollar, with the level broke at 64.10, now looks towards the region somewhere of 62.80 to 63.60. In light of how the technicals are, what's concerning is the ADX is trending to a bear case, so it may weigh a little bit further to the downside. Turning to the euro, the market was somewhat whipsawed, nevertheless still holding up a little bit better than the Aussie and still maintaining its topside target, which is seen around 105.95 to 106. Any pullback likely to be shallow, somewhere around 104.75 to 105.35. The dollar yen still struggling to take out that key level of 149.60. Nevertheless, the technicals are still weighing to a negative bias, and therefore, since the rejection of 151.25, I am still in support of seeing this level go and open the way towards 148.30.50 as a potential target this week. Sterling also a little bit whipsaw, but still, like the euro, holding to a slightly positive bias. They could see further gains on towards 128 and reassess from there. Any pullback to be shallow, and a Caesar base around 127 to around 126.5. Slightly calmer price action when it comes to gold as it closes out pretty much flat around 2,630. Nevertheless, I still feel the potential there is to the upside and likely to look towards the region of 2,650 to around 2,680 reassess. Any weakness towards the bottom side of the range around 2,600 figure 20 should find demand. Turning to oil, the market plummeted back close to the 66 base zone. Still feel this level may hold, so demand should return and see a recovery like previously and look back towards $70 to 72 and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the Intraday report. I hope you enjoy a great start to the new week.